Looks like we're good to go. One says it's frozen. Hmm. I can get much either. Hmm. Okay. Spinning circle. Try giving it a refresh. Looks like I'm good here now. I see Sean saying don't touch anything. Now we're going. We're all good. Okay. Yeah, not sure what the deal was there. But okay. Okay. All good. Okay, good. So it looks like we got some pretty good feedback. Thanks guys for bearing with me there. Looks like we're good to go. I will, as long as we're still straight, everybody keep me updated though. If there's any issues with the stream, of course, let me know. But we're gonna go ahead and get things kicked off. Slowly getting better. All good here. Okay, cool. So guys, welcome to Own the Chaos. My name is Brad. No Fat Man Zoom right now, so we'll be back to our regularly scheduled programming tomorrow at 3:30 p.m. Eastern time. We'll be live. We'll be in the studio, all that good stuff. But for now, we're going to talk about what's going on throughout the week. So Thanksgiving's coming up on Thursday. It's going to be a short week. There's a half a day on Friday as well. But there's still definitely things to consider and talk about that's going to be going on the market that you guys should make yourselves aware of. So let me go ahead and let you guys know what today's show has been brought to you by. And it's been brought to you by none other than Own the Chaos. If you guys go to ownthechaos.com, go to get the watch list. You can get a free watch list from us every single day of the week before the market opens. We give a snapshot of the stocks that we think might be moving throughout that day, and then also in the short term. We're short to medium term swing traders, and so we get some ideas every single day of where we want to go with our money, and we kind of share that with you. This is what we're doing. If you guys find value in that, then so be it. But it's absolutely free. So go check that out. It's ownthechaos.com. There's also all kinds of other goodies there. If you guys want to get my trade alerts, if you guys want to see what's in my portfolio, if you want to get a live stream that's exclusive to our Chaos Crew members, we go live every morning as the market's opening, go check that out. Again, it's at ownthechaos.com. I'd love to have you guys' support for the channel there. All right. So, yeah, thanks, Alan. Alan says get the mentorship, good stuff. So have some questions rolling in, and I want to keep that going. So keep that dynamic going. If you guys have questions about stocks that you're watching that you don't know exactly what to do with, or maybe you're considering taking an entry on some stuff, certainly want to hear from you there. For me personally, I'm super pumped about this week, even though it's a short week, because one of my big holdings, Dick's Sporting Goods, has earnings pre-market on Tuesday. We'll get into that a little bit as well. But one thing that I really kind of wanted to hammer home before we get into anything else, as far as earnings and that sort of things considered, is this conversation with Jerome Powell. And, is he going to get reappointed? Is he not? And where the market could end up going if he's not. I think obviously there's two candidates here, Jerome Powell and Jerome Powell. I think is going to actually end up going back into being the Fed chair. There's a couple of reasons as to why I think this might be. The alternative is far more dovish than Jerome Powell, and the entire market is going to be really. Uh, the reaction is not going to be great if Jerome Powell gets fired. Right? If he doesn't get back into his seat, the market's going to react negatively. And so I think there's certainly something that we should be considering, right? Because there is a dynamic in which the White House may go another way other than Jerome Powell. And I think that that's certainly something that we all need to consider. So, what do you do if Jerome Powell actually doesn't get back into the Fed chair seat. And I think that there's a lot of headlines going around about, what do we do? Should we be concerned? Is there going to be a stock market crash if Jerome Powell does not actually get nominated back into his seat? And I actually think that there will be obviously some short term reaction to the downside. I think that we will see some selling off, maybe for a day or two, maybe perhaps even a week. But I think it's just a short term reaction. The Fed doesn't make economic policy. They make it's not like don't get me wrong. There definitely is a reason why the equities keep going up. It's because of the repurchasing of bonds and all that good stuff, and they're going to be addressing that. Obviously, inflation is somewhat in the control of the Fed, but the Fed can't hire more people. The Fed isn't responsible for lowering the unemployment rate. Right, all they can do is fiscal policy, not economic policy. They can make certain influences here and there, but it's not really going to impact, or it's not going to what's the word for it? The Fed can only do so much. Is basically what I'm trying to say. The economy itself is strengthening and it is super strong. And we're seeing that with a lot of the earnings that we saw from retail. The consumer is just on fire right now. And the economy runs on 70% of the economy runs on the consumer, basic consumption from goods and services from people like you and me. And we're seeing some huge numbers from retail, despite inflation going up, despite some of the supply chain issues that we're seeing. And so I think with the Fed, I think that this Fed decision certainly could impact the markets short term, but long term, with the economy being on fire, I don't think that there's anything to worry about. So for me personally, here's the plan. As far as I'm considered with my own investments and my own holdings, and our Chaos Crew guys can probably know what I'm going to say, and that is is to do nothing. This Fed decision isn't going to cause me to take any action on my account whatsoever, because even if there is a sell-off, let's just say, for example, Jerome Powell does not get the Fed, chair seat again. He's out. And we see a little bit of a downturn. I'm not going to try to time exactly where the bottom's going to be. And I'm also not going to try to time for the what ifs. My expectation is Jerome Powell is going to keep his seat with the Fed. And I'm not going to risk taking money out of the market in the event that something else happens, that something different happens than what I think is going to happen. So if you are worried about Jerome Powell not getting his seat back, and you think the market's going to take a downturn, then taking your money out obviously would be the smart move. But what if he doesn't? What if he keeps his seat? Then you took your money out for no reason. And I think that at the end of the day, the reward outweighs the risk, especially if we're only going to be seeing a bit of a short-term drop, which I think is very much on the table, considering all the strong numbers we're getting from the consumer. So I think that personally, there's not going to be a crash. I've been saying this since March, and everybody who, it was funny when I said in March of 2021, this year, that we will not see a stock market crash. People thought I was crazy. I still think that. I still think that we're not going to see any kind of crash anytime soon. And I think that there's a correction that's certainly on the horizon, but we don't see that likely until around 2022. Probably like February, March is what I'm thinking. Kind of like what we saw last year, or this past year, sorry. February, March, we saw a little bit of a downturn. A lot of that was revolving around inflation, the Fed, and the 10-year going back up. And I think that that's going to continue to become noise that gets louder and louder. But I don't think that really gets super loud until we get to 2022, particularly in the early months of the year, when we start to see tapering really kind of get sped up, and then we start hearing more and more talk of interest rates going up from the Fed. That's when things are going to probably see a little bit of a correction. But even then, the economy is going to be on fire still. Even then, we could see a correction, but it's not going to be a crash. I don't think that we hear this on YouTube all the time, where we see crashes happening. The titles. You know who I'm talking about, right? They love to talk about stock market crashes all day long, and I might be the boring one that says, "What are we all worried about?" At the end of the day, your money, especially in an inflationary environment, is better off being in equities, in stocks. The best place to park your money in inflation is stocks, because they're all going to keep going up. They still have to raise their prices. And it's certainly important to pick out which ones, which is why you guys are here and why you should be hitting that subscribe button, hitting that like button if you guys are liking the stream so far. Um, because we got some good stuff for you. So we got about 77 of you guys in the house. I certainly appreciate it. I wasn't trying to get political, but there's a lot of things this week that are weighing on the stock market because of politics to a certain extent. And I'm not trying to swing it one way or other. These are just the facts that are going on. We have obviously the White House that's going to be appointing the Fed, and that certainly could impact the market in short term. So I just want to make sure that we're addressing that. Secondly, the White House also opened an investigation on energy stocks and oil in particular, and opened an FTC investigation. If you guys didn't catch this and saw that the oil, you guys know that I've been a big bull on energy, and oil has taken a huge hit. We just take a look right now. I actually ended up taking a position on Marathon Oil on Friday because it just tanked. All of oil tanked. So all of the oil manufacturers, oil stocks really took a beating. I'll show you guys my screen here. So this is actually took a position on Marathon Oil, came down and touched the 50-day moving average. Now, I think that there's potential for this to actually come a little bit lower. But one big reason that this came, there's actually a couple of them. One of them is that we saw a rise in COVID cases, and we saw what COVID did to oil and energy, right? The demand theoretically would go down because there's not going to be as much travel that would be there if there was no COVID, right? So that certainly has had an influence on energy, but also this investigation really kind of what sparked the huge downturn in energy on Friday. So if you guys didn't get this news, basically what ended up happening was that the White House, like I had mentioned, they're opening up an investigation through the FTC at oil and gas because they think that they're price gouging essentially. Which I don't know if that's really the case. There's a couple of things that I was just reading about in some cases that the White House is making, especially when it revolves around some of the energy reserves that we have. And real quick, I did have this. I can pull it up. One moment, if you guys just give me a moment here. I had it pulled up. It's a very interesting statistic. So if you guys have ever heard of the Strategic Petroleum Reserve, or the SPR, they're a U.S. government complex of 4 sites which keep underground storage caverns created in salt domes along with Texas and Louisiana Gulf Coast, yada, yada, yada. So the SPR is basically our reserves. It holds 606 million barrels as of last week, which is a lot, right? That's a lot of oil. But that's actually only about a month's worth of oil. So some of the arguments are being made that we should tap into some of the uh, oil reserves because there's a lot of it there. But it really doesn't satisfy the demand. When you look at the U.S. consumes 20 million barrels per day. The SPR holds around 606, like I said. And so that's only about a month's worth of oil. That's not going to take care of the demand issue. They have to be able to produce more. And so there's this dynamic going around that, the U.S. isn't pumping enough. And then obviously we have OPEC that's not going to budge on any of their production, but demand's still there. And so what happens to oil when there's low supply? It goes crazy. And so I think that some of the downturns that we're seeing with the investigation from the FTC and then also with COVID, which we think that, this fourth wave that we're seeing from Europe, as well as some of the areas that were untouched by Delta are now creeping their way into the U.S., other parts of the U.S. with the Northeast and that sort of thing. I think these are all just temporary. And I think these are going to be opportunities for you to get into equities revolving around energy. Now, for me personally, I ended up taking a position. Like I said, I have about 100 calls with a $17 strike on Marathon Oil. And Marathon has been a great mover. This is one that we brought up plenty of times. And so this, in my opinion, with it touching the 50-day moving average, I think that there's potential that this could continue to hold here. I really like where it's sitting at right now. If it does come lower, which there's certainly a possibility, there could be another opportunity for Marathon here at a support around $14. So this is just one example of an energy stock that I would take a look at if you guys are looking for other opportunities in the market. Now, there's other ones as well. I have Halliburton, which I'm actually down quite a bit on, but this is oil services. You're looking at the ETFs. This came down and tested the 200-day moving average. This looks to me like another good opportunity for Halliburton, but you can see the move that this has made since the pandemic. It's just been on absolute fire. So I think that, in my opinion, these are going to be good opportunities, especially if we see more volatility in the markets, which we saw, last week. And I think it goes into this week a little bit. And I think we're on the other side of this after Thanksgiving. So we might see a little bit more turbulence, volatility this week, especially on the stocks that have been hitting hard over the last couple of days and really the last week and a half. But after Thanksgiving, I think things start to ramp up, and then we're going to see more and more of what we call the Santa Claus rally. And I think that's going to become more and more of a thing. Just checking in with you guys. Alan says, I like that $14 mark on Marathon Oil. Yeah, we can go back and revisit Marathon. The $14 mark, yeah, right here. So if we just move, so you guys see that I had this area marked. This is what this horizontal line represents on Webull. If we take another line here, we can kind of look to see where this was a previous resistance on Marathon, right at $14. So if it doesn't hold this 50-day moving average, I would imagine that that's probably going to be the next area that Marathon actually ends up testing. But for me personally, I have these $17 calls. They're out in January. I got some time on them. And so I think that we actually see this go back up to $17, maybe even higher than that. By the end of the year, I think December should be a good bounce back month for energy personally, because you got to think about this, right? We have the holidays coming up for 2 Christmases, essentially. Families have been worried about visiting each other for the holidays because of COVID and that sort of thing. So I think there's just going to be so much pent up travel demand right now and going into the holidays that oil consumption is going to go through the roof. And not to mention, obviously, the weather and that sort of thing is certainly going to ramp up. It's just all going to pile on. It's all going to snowball. So energy, in my opinion, is going to continue to rock and roll. And this is just a temporary setback. If you guys are looking for opportunity, energy, in my opinion, is where it's at. JB Smith says 14 definitely feels good about 14 as well. I like that. Cool. Good stuff, guys. Bring the questions here. Bring the questions. If you have, stocks that you want me to take a look at, certainly would be happy to do that for you guys. Cool. So this week, we got a pretty important week, even though it's a short week for earnings. Last week, we saw some incredible numbers from retail, right? As I mentioned at the top of the show, I think that retail in general is going to just continue to kill it. I think on top of energy, we're looking at potentially buying a dip on. I think this is actually going to be something that you buy high and you can even, sell higher. We talk about buying low and selling high all the time, right? That's the name of the game. That's how you make money in the stock market. But there are rare instances in which you could buy high and sell higher. And I think retail right now, even with the move that it's had in a lot of areas, could continue to be that. And that's why I got into Dick's Sporting Goods. That's why I made the trade on Macy's last week, which you guys saw. And Macy's did incredibly well. I ended up selling out of Macy's last week on Friday because of my exposure that I already have with Dick's Sporting Goods. So they have earnings on Tuesday. I think that Dick's Sporting Goods is certainly set up to really make a solid move. You guys can bring the bring the jokes all you want. We've heard them all already, but I am in Dick's. Looking at this, Dick's, I think is actually a really good opportunity. This thing came once it busted through that 50-day moving average, it was game over. So I ended up taking 135 strike calls for Dick's Sporting Goods, and it's continuing to rock and roll. Looking at this is potential cup and handle here breaking out, and this might be making its way towards all-time highs. I think it certainly could get there if any indication, if the indication of what we saw on retail between Kohl's and Macy's and Walmart and Target and Home Depot, Lowe's, all of those big box retailers that we saw over the last couple of weeks came out with amazing earnings, despite the inflationary numbers, in spite of supply chain issues, they still crushed it. Imagine if there wasn't any of these problems going on, what retail would look like. But nevertheless, it's going up, in my opinion, and especially if we get closer towards that Santa Claus rally leading up into Christmas. I think that these stocks are going to do extremely well. So, these, in my opinion, definitely ones to hit on. I got into Dick's Sporting Goods only because of the chart. I thought that this could looks like a pretty decent breakout chart. But any of the retailers, I mean, you can take a look at Nike, for example. Nike's been crushing it, um, and still crushing it. It came down and touched this support right around 166, and that looks amazing. Love Nike. Lululemon was another one. This was on our Chaos Crew watch list. Again, go check out the link in the description. It's at ownthechaos.com. We put this one on the watch list several months ago for our Chaos Crew members for absolutely free. Again, if you go check that out at ownthechaos.com, would love to have you guys over there and be a part of the Chaos Crew. Looking at Lululemon, this thing has been on fire, and I think it continues to go crazy. I will say, though, that Lululemon in this space is a little bit high on the PE side. So the price to earnings is a little bit high for Lululemon. So it is a bit expensive, even though I do think it could go higher. If you want something a little bit cheaper, like I said, Dick's Sporting Goods is certainly it. Let's just take this as an example, right? Compare this to some of the other retailers. You look at Under Armour, and maybe this isn't necessarily fair, but we can look at some of the other ones too, just to see how they compare to Dick's Sporting Goods. So you look at Under Armour, and their forward PE is around 43. You look at Lululemon's, and theirs is 63. So that's why I was saying it's a little bit expensive as far as Lululemon's concerned. You look at Nike, that's 48. Dick's is at 10. The PE for Dick's is 10. And if you want to compare it to other retailers, such as Walmart, for example, Walmart's also pretty up there compared to Dick's Sporting Goods. It's at 22. Target is at 19. So these are just way more expensive than Dick's from a PE standpoint. So I think that, in my opinion, even with some of the moves that Dick's Sporting Goods has made, it's still actually lagging behind from a forward PE standpoint. So that's why I actually like this one too. Obviously, the chart looks really good, but when you start to dig into it a little bit more, Dick's, in my opinion, is super undervalued, and isn't it always? Just saying. Oh man, how many people are going to unsubscribe because I said that? How many should be subscribing because of that? Is really the question. It should be all of you. If you're not subscribed, guys, make sure you're hitting that subscribe button. I certainly would appreciate it. If you're just joining and visiting this channel for the first time, this is Own the Chaos. We go live every day of the week. Sundays is kind of our flagship show, 7:30 p.m. Eastern time. We go over what we think is going to be happening throughout the week. And then Monday through Thursday, we react to it. So we go live on Monday through Thursday at 3:30 p.m. Eastern time, right around the closing bell, just to kind of give you a reaction of what's going on in the market. And we'll react to some of the earnings. Obviously, we'll be reacting to the Dick's Sporting Goods. But guys, if you're not subscribed already, make sure you're hitting that subscribe button. We have a high rate of people who watch our channel, but just aren't subscribed. So what are you waiting for? You watch the channel, you might as well just hit that subscribe button. So, Niraj, nobody wants to see that. I'll get demonetized. Like literally, I'll get kicked off of YouTube. It's just so offensive. The man boobs are just so offensive. I'll get kicked off. Hands down. Got 48 likes in the house. If you guys, we could get those likes up, certainly would appreciate that too. Hit that thumbs up, guys. Help show support. But I do see some questions coming in here, and I'm going to get to those. A couple other things that I wanted to just address. The Zoom is going crazy over the last couple of days. And again, we talked about it earlier in the show about how it did actually pull back a little bit on Friday. It had a pretty solid move, but this actually started to wake up a little bit after coming down to 245 because of COVID cases. We know that this was a huge COVID player when COVID cases were going crazy, and this was, that we were height of the pandemic. Zoom was going nuts. But obviously, as we start to see more headlines of increased cases in Europe, and we're starting to see pockets in the US of cases going up as it relates to the Delta variant, Zoom certainly could continue to go up. But here's the thing, we've talked about this a lot on this channel. If you guys haven't heard this already, um, then just pay attention here, because Zoom certainly has benefited from the pandemic. No question about it. And it did get ahead of itself. I mean, let's be clear. The stock was just like crazy, um, crazy low. It was down at around $40 a share, $40, $50 a share before the pandemic. And then it went up as high as almost $500 a share, somewhere around there. Um, so it went crazy, right? It was just nuts. And then, investors are looking at this and thinking, this is trading at 90 times sales. It's got, wild PE. Right now, it's got a PE of 51. So it's not terrible, especially in the tech space. It is still expensive, let's be clear, but it's not wild right now, especially compared to some of this other stuff that we're seeing. I mean, do we even need to talk about EVs right now as far as valuation is concerned? So Zoom, in my opinion, while it did benefit from the pandemic, I think that it's got a huge space now because it's got so much exposure because of the pandemic. This isn't going to be something, in my opinion, that actually goes away at all, because of the new normal that I know nobody wants to hear about. But there is a certain element to this. People that are working from home are staying at home, and they're staying working at home, and we're seeing this all over the place. Zoom is becoming an integral part of that. And so this hybrid approach to work is going to be around forever. It's not going away. So Zoom is going to continue to play a big part in that. And let's also, we look at how they gave away a lot of their services um, to medical facilities, to education, and they're gonna continue to cash in. So they have earnings on Monday, and I think that they're gonna do really well as far as that's concerned. They are after hours, so we'll certainly be giving our reaction to that. So we have Zoom, who has earnings on Monday afternoon. We have Dix that has earnings on Tuesday morning, and then real quick, this was one that was a pretty popular meme stock with the Wall Street Bets crowd that actually went crazy. So Urban Outfitters also retail that they'll be reporting after hours on Monday too. So tomorrow afternoon we'll get our live reaction to Urban Outfitters. This is another retailer. If you guys are looking at retailers, this actually came down and touched the 200-day moving average, and this looks like it could be a potential nice setup if they have good earnings as well. If they come in with good solid earnings, I think, in my opinion, Urban Outfitters could also do extremely well. So make sure you guys are keeping an eye on that. Um, Great question here from Rob T, who asks, do you think that Cleveland Cliffs has found a bottom? So potentially, but like I said earlier in the show, I think that with Cleveland Cliffs and really the stock market in general, from a broader perspective, I think that we're still going to see some volatility this week. But watch as we get into, after Thanksgiving, um, into next week. I think that that's going to be really when we start to see things. So I think just exercising a little bit more patience on Cleveland Cliffs is going to pay off. That being said, the question was, has it reached a bottom? I think there's certainly potential for this. You guys know that I love Cleveland Cliffs. It's a great company. The stock's been awesome, super nice and organized in this ascending channel, and we're starting to approach the bottom of that. Now, it had a nice green day yesterday, or on Friday rather, after coming close to the bottom of this ascending channel, and it is held up above this beautifully. This is also met with the 200-day moving average now. The bottom of this channel is. So you can make the argument here that we could start to see this turn up. Now, I preface this by saying that we could still see some volatility in the market, like I was saying earlier, but the chart certainly looks good for potential bottom on Cleveland Cliffs. I do have calls on this one as well, $23 strike that are out to January. So I actually really like Cleveland Cliffs here. If you guys aren't in it yet, it could be a good spot. Could be a good spot for it. Let's see here. G. DeGroot says, what's up with PayPal? Really great question. I actually ended up taking a position on PayPal as well. And I think this is going to, the patience here is going to pay off. I had mentioned after their earnings that I think that there was potential for this to come down to 178, 180. And it certainly looks like it's on its way there. You know, that being said, I don't try to time anything. So I took some out of the money calls on PayPal way out to February. I think that we'll see 220 out of PayPal. Uh, uh, it's just going to take a little bit of time. It may take it testing back down here at the 180 mark before it bounces back. The reason I took it was because I thought that we actually saw a bottom here on PayPal at 200. So I ended up taking those calls at 200, and then the days following me taking this position, it still started to sell off. So I do think that patience is going to pay off for PayPal, but it's just continuing to sell off. The sentiment's just not there like it should be. More and more headlines are coming out about how Affirm and the buy now pay later is going to take over the world, right? But PayPal and Square, they're not going anywhere, and neither are the credit card companies for that matter. And Visa is having its own issues. I think you look at Visa, and it's still going to be present itself with an opportunity. You want a stock that's going to do well during um, inflationary times. The credit cards, PayPal, Square, they're all going to continue to do well. I mean, they have pricing power. People are going to still spend money no matter what. So I think that they're going to be just fine. Visa obviously had taking a hit because of the um, partnership with them, and Amazon is no longer in Britain anyway, no longer accepting payments through Visa if you are an Amazon shopper in Britain. So that's why this sold off. I think that actually Visa could be a good opportunity here at 200, but I really like PayPal as well. It's going to take some patience. I hope your time horizon for PayPal is a little bit longer than a couple of weeks, because I think it's going to do fine. I think should start to see this turn around by the end of the year. But PayPal's not going anywhere, guys. It's just not. I think it'll be just fine. Um, PayPal's the payment daddy of the internet, says Narash. Yeah, ain't that the truth? Um, and I mean, and I would keep adding to PayPal. Honestly, I would. The move down here, I think, is a bit overdone, and you can look at this just from a technical standpoint too. Look at it's crazy oversold. Um, but I do think that there's potential for this to come down as low as 180 before we start to see this bounce. And I mentioned this, I believe it was right around earnings when we talked about the earnings expectations for Visa. I was like, if they miss, there's potential for this to come down to 180, and it looks like that's still on the table. But it didn't stop me from buying it, right? Because I'm not going to try to time this bounce. I'm just going to be in it and wait for it to turn around. Oliver Thorpe says it's only Amazon and Visa credit cards in the UK. They will have accept Visa debit cards. Okay. So there you have it. So it's just the credit card side, not the debit card side. So yeah, if you just have a straight up Visa credit card, you can't. But if you have the debit card, so appreciate you clarifying that too, Oliver. But yeah, I mean, Visa's gonna be fine. The reaction there was crazy. Visa will be fine. All right. Good stuff, guys. So that's going to do it for today's show. So it's pretty short. Again, there's going to be some. I still think, just to kind of give you an example of where I think the market's going for this coming week. I think we see a lot of low volume. There's going to be a lot of traveling going on, so investors aren't going to be trading a whole lot. We still could see some volatility. I think that we see maybe some more selling in the broader markets. We could see the S&P actually move down, especially if a couple of things happen. Right? If Fed Chair Powell is no longer going to be Fed chair next year, that could create some volatility, and I think a temporary move down. But I think that's going to be a buyable event. I don't think that the market's going to react too long. I don't think we're going to see a crash. Maybe a small correction, 3%, something like that could take place. But again, a buyable event. I think that if you have some cash on the sidelines, put it to work, because I think that we see a really nice bounce back going into the end of the year. And as far as this week's concerned, the big retailers are going to be ones to watch out for. We have Dick's Sporting Goods, Urban Outfitters, a couple other ones. That's going to continue to be the theme. And then obviously Zoom is going to be reporting earnings after hours tomorrow, which we will be live for. So make sure you're hitting that notification bell to get notified when we go live at 3:30 p.m. Eastern time tomorrow. And guys, again, go to ownthechaos.com if you're not there yet and become part of the crew. Every day we put out a watch list of 5 stocks that are worth watching through the market throughout that day and beyond. If you guys want that watch list, we absolutely crush it on there. And our Chaos Crew members, our community is amazing. Guys, we can't thank you enough for tuning in. Go to ownthechaos.com and become a member for free. We'll see you tomorrow. Again, 3:30. Guys, that is it for me. Bye. See you tomorrow.